Correlation is not causation. Let me explain. We have a lot to cover, but this is something that's really important and people need to get. What people are looking at is they're looking at what's going on with Capital One. And now Capital One, obviously right here, and they're looking at the finances of Capital One, and they're saying things along the lines of Dollar General and Dollar Tree is where people shop, and we're watching that go under. And what they're not saying, this is Dollar Tree and Dollar General, and they're saying Capital One, which is a credit card that a lot of people that would use that might have a lower credit score, I guess. I don't know what their relationship was to it, but they're looking at Capital One, maybe because it's the largest publicly traded one. Nevertheless, they're equating this, and this is a really important concept to get because I see this stuff all the time, where people will say, oh, these are dropping and no one's shopping there and the consumer is maxed out. What they're not realizing is something that we talked about earlier in the week and did a trade on, is that Walmart is actually kicking their butt. And people are going to different stores via DoorDash or Uber Eats to just get what they can get at the dollar store, get it delivered to them, versus walking in the store and doing it. It's actually cheaper to go to Walmart and have it delivered, frankly. That's what's happening here. If you take a look at the correlation here, it aligns. So the idea that you're going to say the cause and the reason that this is dropping is because there's a recession coming is not action. It's not an actionable statement. And then to overlay this and say it's because of the credit increasing as Dollar Tree and Dollar General drop, okay, that means they're weak and now they're going to have trouble paying is the assumption. That's not the case at all. You're watching Capital One go up, you're watching Walmart go up. What you have is good old-fashioned competition, and Dollar Tree, Dollar General are getting their butt kicked. Now let's get to the video. To start with, we're just going to go through the basics of the ES. We definitely have to get into AVGO, why it's getting pummeled tonight, the spike in X, and how I think US Steel is actually going to play out. This is actually going to be a fun trade. But there's some other movements here that I want to discuss. So if we just look at the S&P 500 and we just take a look right here, we can see our levels very clearly, right? I mean, there's not much to say or do there, is there? I mean, you should be able to see from this peak over all the way to here, it's pretty clear stuff. I don't think that anyone doesn't see this, right? So we're not going to add a lot of value there. If I drop in the RSI, you can see the RSI as well, and you can see the peak here, and you can see the rally down, the reset, and then from there you can see how we just lifted and then we're here. So we don't really have anything there. What we do have is we have this cross. I tend to not use the cross. I just smooth out my RSI and watch the levels, and it tends to work just as well. But if you like the moving average, that's fine. Some people want to use the moving average, and that's okay. There's nothing wrong with that. Do what you're comfortable with. If we take the ES and we overlay just the very simple moving averages, we have broken the 55. Now, if I take the futures market and I overlay that with the S&P 500, the SPX itself, you closed under the 55 for the first time today. Overlay it with the SPY. You closed under the 55 today, and you're sitting on the 22. This is significant going into non-farm payrolls. I'll explain why. For time's sake, I'm just going to use the trading view, but you can go to a lot of different sites and get this. But here's the employment change. We were looking for 145. We came in at 99. ADP is a precursor to the private sector part of non-farm payrolls. Right? This is really important to get because they only deal with companies that are in their system that do have 30 employees on average. That's who uses them. This is a really important concept to get, guys, because it's telling you what the private side is going to be. That doesn't mean you know the other side. You don't know the government side. There's a lot of parts of it that you're not going to be privy to, right? But you need to understand that. So when you click on this, it'll show you actual versus forecast, actual versus forecast. And since May, you'll notice the shift, right? It's getting worse and worse and worse. And what you're seeing is they're just walking you down, right? So if we go from April, where we started to see it was good, and you see that 184 there, and then you go to 192, then you have 152, you get it? 150. And then you start going 122, and then you realize that you're off 50,000 in 60 days. It's a big number, guys. Okay, people don't view it that way, but it is. It's a big number. Now, this is adding panic to tomorrow's number. What we're hearing are mixed results. We're hearing that tomorrow's number might be okay. By a couple of people are coming out and saying this, but let's take a look at this just so you can see what you're going to be looking for tomorrow. And I think it's important. And again, I'm not going to edit this. We're just going to roll with it for a lot of reasons. So you're just going to have to deal with some of it. It's just easier for me, quite frankly, just to get through it all. But you have government that you don't know what they're going to do every day. It's like a box of chocolates. Manufacturing jobs, non-farm payrolls, they're looking for 160. Goldman is at 155. JP Morgan's right around there too. A lot of people are saying this hurricane had a problem with it. Non-farm payroll, the private side, would be the most correlated to the underlying numbers that we just saw from ADP. This is predicted to move us 1.5% to 2%. If we're wacky either way, see, you're in this weird spot in the market where if you're not up and you're not down and you're not just in the middle, you have to be in the middle or you're hit. And then we're going into next week. And it's a real problem because you have some big data next week. Now, we're going to get into that on Saturday, but let's get us through tomorrow. And let's look at this on a 1-minute chart and just look at what exactly we're dealing with. And what I'm going to do here is I'm going to go to a bear chart, and I just want to show these levels on the SPY tonight. Because to me, if we're just going to focus on where's the issue, where's the real issue tomorrow, it's right there. It doesn't get any clearer. If you want to look at the week and what you're dealing with that. And then if you overlay this and say, okay, well, I just want to focus on this week, where else would you look? And you just pop in a couple key levels here, guys. That's all I'm doing. And I'm going to show you how to use something in a second here. Now, once that's done, you're just going to go to, here's Thursday, and then you're going to go to Friday, right? Kicks in on Tuesday. So I'm going to go to Tuesday. I just want to show you this so that you can see where you're at. So you go to this Tuesday, and you lay off the simplest things just on the SPY. This is what you're going to want to use. I think this is what you're going to want to use because it's been absolutely glaring since that close. And again, what we really want to do is we want to use that, but I want to break something out. It's funny, I keep saying that I'm not going to edit this and you're going to have to deal with it. They actually made me a meme. I must say I don't have time to edit a lot. So they made this meme for me. It just made me laugh. I figured I'd share it. Post-market video mess up, AT. I'm not going to have time to edit this. Boom. It's like flex tape. I guess it is. It's kind of funny. At least I admit it. All right. So here we go. Bonk, bonk. Do you think that's a level you might want to watch tomorrow? Probably a good idea might be to put an alert on that anchored VWAP that's going to take you from that gap down on Tuesday. The second thing that you might want to do is overlay this anchored volume profile. I think someone said there's a session 2, and just see where you're at and just look at these levels. And what you're going to see is the value high, the value low you broke, which is not ideal. That's usually pretty bearish. Point of control shows where everybody's at and look where you stopped. And all I do is go back to the beginning of this week. These are critical levels on the S&P that you're going to want to watch tomorrow. Now let's get to some news. Now I want to walk through this one I'm really going to walk through this one on Saturday, but this is what you're looking for, guys. I'm going to show you these. This is what you're looking for in this kind of market. You test the 55, you flip the 55, and then you put the trade on. We actually did this one yesterday, and I just want to show you this because there's areas of interest, and your job is to spot those areas of interest and then see how you act at them. For example, you could be looking at previous breakouts and then trying to see how you act the next day. So all we're doing with these, and again, I will walk through this on Saturday in detail, but you see that area right there where that open and that open tie together? All I was doing was this yesterday. I am looking for relative performance. That's it. So when I have something along the lines, let's take a look at Apple here, and you can see where we were in the beginning of August, and then we're going to drive into the hourly. See that move down, and then you flip, then you do the undercut and flip, and you moved high all day long? All day long yesterday, we had the S&P and the Q selling off. This did not. There's more to it. I'm going to walk through it step by step on Saturday and actually do a tutorial on this. These are the kinds of trades you have to be doing now. There's a couple things I'll just throw out there right now so that you get. This kind of thing with the RSI under the hourly, and you start marking off specifically how you acted there every time that you've been there, right? It'll give you an indication, and then you're looking for the trigger. I'm going to walk through this one step by step. These are the kinds of trades you're going to be doing now probably to the end of the year. This kind of stuff, the pullback, the trade up on the tech side until this stuff settles out. There's too much nonsense out there right now, but I want to point that out. It's not that you can't trade tech. You just have to realize how to do it. A lot of people are struggling right now. And I'm going to just show this stuff where they're buying names like Affirm. I was talking to one guy. It's happened to him twice, bonked, where you're doing the breakout, it runs. He's a genius. An hour later, he doesn't feel like a genius, right? And you're seeing that over and over again. What I want to do is suggest that you start looking at more pullback strategies on the tech names in this situation and start looking at more of the interest rate bearing trades. But let's get to some news. Now, I am surprised that this is only up where it is. And I'm going to just say this disclosure. I have a position in this. The idea that this is not up more on the news that came out tonight, where Chartlng Links has said they're still interested in the company. I'm not going to go and show headlines right now. We're just going to get to the news. They might even be right here right now. They still have their buy rating on it, 47. Did they drop it? Let's see if they dropped it. We can do this. Breaking news right now. Drop from 47 to 41. Maybe they're on the deal team. Let's see what else you have here on the news side, if they have anything. No, I'm not going to go through all that. Let's get rid of that and come back over. Oh boy, now it's there. Now we did it. All right, so more important than that is I want to just focus on this, and that Chartlng Links is coming out and saying they're still interested. A matter of fact, let's just do it and break in with it. So here we are, and this is the CEO of Chartlng Links. He's on TV this evening talking about what's going on here, that this deal never should have been done. I do think that it's a hotbed right now, but I do think it's very interesting that they did come out and say very clearly that they are still interested in buying the company. His point was, I'm getting the deal in the mid-30s instead of the low 40s. I don't know that that's going to be the case. I think we're all going to be a little surprised how this gets done. But here was the formal statement by Chartlng Links tonight. We commend the president and the government for supporting the decision to block foreign ownership by Nippon Steel. American steel industry, crucial role safeguarding national security. Courageous move affirms our industry. What is the guy going to say? Someone's willing to pay 48, they offered 35. It's literally a no-brainer. After decades of unfair trade practices causing harm to American steel companies and union jobs, it's no surprise union steel workers adamantly oppose any transaction involving Nippon. The extensive track record of injurious trade practices, what's he going to say? They're mean people by saying they're going to fire people and move the headquarters. By taking immediate action, our government showing this type of shameless behavior will never be tolerated. I think this is interesting, but here's where I think that we can actually profit from this. We know that this deal got done around 35. We know that this deal that they're looking for, we were talking about this 48, and we expected a bidding war and we didn't get it. I think that it's unrealistic to expect shareholders they're going to take 35 that they never would have taken before, right? So the question becomes, how does Chartlng Links get close to where Nippon was? They can if the government comes in and offers them like zero financing to get this done. All of a sudden the terms get better. So maybe they don't get 48, maybe they get 38, and maybe this takes a while. But if you are trying to get a swing state, you don't blow up the deal. You make the deal work. And so what I think is happening here, besides us being a pawn in the election on both sides of the aisle, what I think they're going to do, we're completely speculating. We're out here on the ledge. I personally think that they're going to get this done as soon as possible with some kind of alternative where the financing's in place, American jobs, everything's going to be there. And maybe it's not done at 48, but I do think it'll be done, and I do think it'll be higher than 35. If not, this thing's going to be in court forever, and I can guarantee one thing, it's not staying here. It will wind up trading up on this kind of news because the speculation is going to do that. Right now, you have a deal outstanding where the administration is coming out and saying, we're going to shut it down. The question is, does he have a leg to stand on with national security? I think there is a leg to stand on if you're going to say we use U.S. steel for our tanks. I do think there's a leg to stand on with that. I think it's a real issue. And I don't know that they're going to be able to combat that. I'm far from an attorney. But do you really want to go through 3 to 5 years of that or see what the new administration is going to do? But the bottom line is, I'm not sure how this continues to trend down from here. And this is from just full disclosure. I have a position in U.S. Steel here. Now, today is something else that was interesting. We're seeing people chase yield and buy defensive names, and we're starting to see those crack a little bit. But I think this is just the non-farm payrolls jitters. But it does present opportunity. So candidly, this is something that I'm already in. I really like this breakout a lot. And if you take a look at this on a weekly chart, we'll see how we close tomorrow. But I like that a lot. I really do. I like these kinds of moves where you form these cups. You come back, you retest. You're doing the same thing here. One could even argue that you have a cup and handle up here. And I do think that's a valid argument that this is the cup, here's the handle, and now you're breaking out. And they're low beta names, so maybe it takes a little bit longer, but I do like this. But this was really interesting today from a trading perspective. And this is really the kind of thing that you have to think about. This is what I'm talking about, trading off of pullbacks and trading off of bases. So what we saw is everybody wanted their $1.40, so they stayed in the name in order to get their $1.40. And then what they did was they just panic sold. This is why I never buy just the dividends, because you just don't know what you're going to get. So what they do is they gap you down, and then within 10 minutes, you're falling off a cliff. But it presents, if you know how to read this kind of stuff, what it does, you have your levels marked, obviously. But once you have this up, it's going to mark levels for you that you know that are become places, as I refer to, places of interest. And you just want to watch those areas. You can always look for these areas like this. You can just very simply always drill down and take these areas and just go and take a look and go, oh, okay, well, this area in particular, you even had some stuff right around here, and you had some areas over here. You see a battleground over here. So you have that area, right? And you also have that low. So then when you take this area and you're watching it on a 1 minute chart, it becomes significant. And that's exactly what presented an opportunity today. Whether you're going to use RSI, MACD, you're going to use volume, you're just going to read a chart. I don't care if you use tea leaves. I could care less if you're using tarot cards. All I'm saying to you is mark off your support levels and then overlay the things that are going to work for you. For me, I tend to use the volume, the change in trend. I tend to use price action, very specific support levels. I do look at RSI in great detail, and especially the speed in which something is dropping when you have these gaps in the chart like this, where they just can't get out fast enough. And that tells you what? They bought it for a dividend. But once you got to this level, it presented a really nice trade. And here, just watch this play out live. What is going on here? Oh, the dividend. Oh, there you go. They sold it for the dividend? Really? $15 on a dividend? Was it worth it, guys? Is that really what it is? They're getting out because they got $1.40? Wow. Okay. Good luck with that. That's one heck of a strategy. This has got to be a trade out here in this. Gotta be some kind of bounce in this thing. All that over a dividend. Really? You're going to bounce. I might do this in a day trading account. It's still early. That's the first bar, but let's watch. I think we're going to try that here. And then what's the stop underneath? It's going to cost me $2. Boop. All right. Bought it. Low day stop. I'm in at 30.47. It's literally going to cost me $1.50 to see if I'm right. If I'm wrong, I'll just kick it. What are we up? $2 already? Trimmed? And I'm just going to hold the rest with the low day stop. What are you doing? Form a little flag. What are we up? 5, 6. Trimmed into it. Up 6. Silly, doesn't it? All that for $1.50. The amount of ag, 7. Yay. Under 5, I'll cut the trade. I'll cut the day trade. I have a ton of this thing I bought. If I go under the 5, I'll just cut the rest of it. Down the half, trimmed into that. Man, they played with people there, didn't they? Gapped it down. Also, you can get your $1.50. 100% out of the day trade. That was fun. But that's the kind of market you're in right now, and it's important to understand that. Comes back down, retest. It's the same level. It's the same super reheated watch. So what do you do at the end of the day? Who buys the last 10 minutes? Okay, you know that's institutions. That's not retail going, you know what I need? I need some Cigna overnight. That's institutional buying. So all they did was just let retail destroy themselves over $1.50 to get that dividend, which I never really understood that strategy. Trades back up, you just get out of the way, and you move on with your life. Just disclosure, I still own this for a longer term swing trade position. I don't have to do that, but I feel the need to, just I guess from a moral standpoint, whatever. So what do we have next? Well, I think we should go over here and just talk about AVGO. And at the time of this, I am short the AVGO, and I did it after hours. I'm just going to save everybody a bunch of time. Guidance was not where it needs to be. Okay, earnings, great. You can't beat by 2% and be trading up here and have revenues coming in line like this. You might as well call yourself AMD. Yeah, that is a crack at AMD and the AMD lovers. But seriously, you see this move right down here? When you start to do stuff like this, you just can't do that. We call it the 5 or the 15-minute thingy, but you always want to watch that. If you can't get over it right here, it's telling you everything you need to know. You just can't get over that. And once you can't get over, it's a wrap. It's pretty much a wrap. But it gave us an opportunity here off the 1 minute. You'll see it pretty clearly right here. I tend to use a 1 or a 15 on this. I find that they work the best. And once you couldn't do that, you break, and then you did a little bit of a rally. I'm still short. I don't see any reason for me to cover it. I don't know what miraculously is going to happen in the next, couple hours that's going to make me want to get out of this thing. The conference call was okay. Guidance was okay. Was it great? Not really. Do you feel the need that you have to commit to this overnight right now because of what's going on with non-farm payrolls? Not really. And this boils down to some of the things I went over last night. Hopefully you guys are getting that I'm trying to connect all these videos together so that you can kind of stick with me through the week on how I see it. It starts with Saturday. It started with Saturday with people saying, I thought you said the market was going to go up. Yeah, over 12 months, not over 2 days. So let's understand that what the Saturday's video is doing is giving you a long-term outlook, and then these are giving you short-term thesis during the day. Yeah, if you've been watching for some time, hopefully you're picking that up. Boy, I hope you're picking that up. But let's talk about this. So the 5-day stocks above the 5-day moving average. This is S5FD. Anybody can see this. And before I forget, and the ADD kicks in, if you are on the wait list, in 24 hours, it does shut down. The next time it opens, I am raising the price of it because of demand. Please be aware of that, or you're going to have to know someone as a referral to get into the room. So if you are on the wait list, make sure you are, because then you will be in at that 125. Other than that, you will not. And the price will go up in the next batch of letters. So just please be aware of that, and don't tell me you're shocked because of it. I just want to make sure I'm very clear on that matter. But anyway, here we are. You need to get down to like the 11. This is my thought. Do you do that tomorrow on a bad NFP? Everybody thinks we're going to get whacked. We don't get whacked. We do the exact opposite. We get a bad NFP and we rally, and then everyone's confused because it's already priced in. Maybe you do. But you have to look at some of these, like the 20-day. And I do look at these a lot. That's not an area. I said this yesterday. This is not an area where this ends. These pullbacks end down here. You're not down here. You're nowhere. You're still at the high. You're in the middle area. And you can see this across the board, even though above the 200-day, which I look at from obviously a much longer term standpoint. When you have these pullbacks, like to here, you'll see that August pullback was here. July, when we pulled back here, you'll see them. It's pretty glaring, right? The 17th, when we had that little pullback, I got a 64. You're still at 71. And then you get to the 50-day, and those pullbacks, again, like the April pullback, we got to a 27. We're at a 65. These are not signs that you're setting up to put yourself in a position to pull back. What I really don't like is that you only had 2 sectors that were up today, and to me, they were short covering. The XLY, which is up, and you can see that, Tesla, there's a lot of reasons why Tesla's up. My personal opinion, I'll leave it with this. The XLY was up and the XLC was up. And you saw that with a couple names. You saw that with Meta today with some bottom fishing. You did see the reversal there and the hold. You also saw this with, you saw this with Google turning green today. And you saw this with Netflix trying to turn green today and hold there, right? They are trying to hold. You can always drill into these and look at a 15-minute chart and see where you are in regards to the 5-day, and you're still unable to break the 5-day, and this is still negative with red, yellow, green. You guys will remember this chart from before. But what we're really looking at here is, was anything up? Not really, no. So I think you have to take this with a grain of salt. But in regards to XLY, in regards to Tesla, well, green's a go, yellow, red. They're all stocked and ready to go. So now 220, which has really been your nemesis, is becoming what? That's actually becoming support, this area, 221.38. So if you sold off tomorrow, this would be an area of interest to look for a bounce, in my opinion. And then if you broke, you go from there. But this is setting up, and the question is why. I have my opinion on it. I think he's aligning himself very closely with Trump because he thinks Trump's going to win, get a position in there, get tax credits. I mean, he's not doing it because, let's not get into it. We all know why these guys do what they do. But here's the 55, and you closed above it again. I think it's worth paying attention to this. I think it's worth paying attention to this volume. So if you do see some kind of sell-off tomorrow to that 221 level, you might want to take a look at this. That is it.